Hey guys, how are you? Yep, the Future of Money Crypto Conference. That's the 26th of November, 6 p.m. Tuesday, Mhlanga. That's KZN, South Africa. I'll be speaking there. You can join us. Very small entrance fee, 80 Randkies. And you can also hear Bronwyn Williams, Kirsty Bissett, and many others. Okay, let's move on to what we're here to talk about, and that is Bitcoin. Bitcoin, yes indeed. So I'm going to talk to you a little bit further about it. We did a bit of a YouTube, and we warned that largely the bias is bear, but it's a tricky market for most people who don't know how to short. Best to stay out. For longs, you're going to get killed. Don't be long, particularly leverage long, and it's probably going to bleed out to the downside. You may recall we were bearish here. We got the spill right. We then had the huge spike that occurred. We warned that spike potentially will fizzle. And that we're probably going to return possibly to the downside of this lower channel, but at least potentially to this double bottom. What I expect will happen is there'll be a lot of support and resistance traders. That's right, support and resistance traders. The elements that many people seem to get in trading, and that often gives you just a loss. So what tends to happen is they'll be buying just before this level, and they'll be accumulating on the basis of this being the bottom, catching the falling knife, must catch the falling knife. And typically they get given losses. So what will happen is they'll get a little bit of a bull flag. So we might go slightly up. I can draw that for you as a sample of what might happen. I think I might have mentioned this already in the last vid, but maybe not. So essentially you'll get a little bit of a rally, something like that, for example. Everyone will get kind of really excited. And next thing you know, you will stab down and you'll run the low. And all of those support and resistance traders get handed a loss. So the obvious support and resistance usually get handed a loss. That's the golden rule. And that's probably what might happen. It could also be a rising wedge. It could have a little bit of a constriction instead of a flag. Who knows? But that would be probably, I don't know for sure. This is scenario casting. This is just overall experience in price behavior. That'll probably be the lesson. It could actually double bottom and then round and then have a push up and then you have a W bottom, in which case that would become a strong case for a final low. For us, we'd call it a relative low too, because we've got a macro draw. We'd call that a relative high to the 14,000 just sub. So, you know, I'm happy with whatever it does. I'll just draw different conclusions from it. But overall, when something's going down, I don't stand in the way of a steamroller on a downhill. It's just generally not a good thing. So the balance of probabilities is we'll probably make a lower low. Do we get to the bottom end of the range over here? Does that mean we might get that 6-8 target and a little bit of a run that's round about there? Hit in the end after coming literally within dollars of our stop loss. Yes. Did I stay the whole way with that trade? No, I closed it because I went on holiday riding motorcycles. I got back in short here, thankfully 1/4 of the size, and then ate some red, but I let it fizzle come out getting out, so I didn't get the worst, but I ate some red on that, no getting away from it. Why? This was just too testing and was too sudden, and you can't allow your account equity to have such level of swings, but thankfully this was exceedingly profitable before and was on bigger scale. So you always should retreat from an idea in a trade. So if you ever re-enter on an idea as it's aging, you should be walking away from it in terms of your sizing. Okay, with that said and done, this is where we're at now. We're back all the way largely. So this is a channel in essence that we feel we've identified, but it's a difficult one to trade because there's up moves. As you see here, there's up moves as well, and then there's spills. Apart from being on a very short time frame and biasing to the bear, most people would lose money. So the big game is defense. It's not what you make. Remember again, I'm going to repeat this because if you're watching the previous, you might have heard it. The big game is not losing, so that you're strong and you have full Bitcoin allotment for the major bull market. A lot of people saying, oh, eternal pessimist, I'm moving, unfollow, you know, crying off. No, we're actually exceedingly bullish, but we're exceedingly bullish at the right time. And that time is not now in our view. So we still feel there's going to be some further grinding down, then there's going to be some basing out, and then it's going to be slowly up, and it's going to get a little bit boring in generally. It's going to shake you off the scent. That's our opinion. Before eventually having a substantial move to the upside. But that could be not in this year. Could be well into next year. It could even knock on 21st. So you could sit for a while. I don't think it's going to be too long though. I think next year's probably about right. We've done some timing analysis. We speak in detail on that in our looms in the premium area. Go hit the links if you're interested. It's not for everybody, and it requires investment time and focus, and you can have a chat with one of us to find out about whether you want to come on board. Let's drop the time frames on Bitcoin. So what else have we been saying to our community? So yes, we had a setup there. You can see it. It was a sweet one, but as I say, we observe. Sometimes you can have setups and you just observe. So the bias is bear. That was the squeeze. We expected this to fizzle. There was a lot of sign that there was pushback, and slowly you break. And cryptos are one of the markets that regularly do this. A spike without follow through, and then a slow deterioration that then eventually rolls into some real convexity and a spill. And that's very bearish and negative. It's kind of like a whole bunch of resources were thrown just to knock it back for a while in the attempt to create some momentum for the FOMO chasers. They weren't there. They arrived here and they just kept a weak grind line going along here, doing all their best. They eventually bought all they could, and they'd had their fill, and there's no one left on the buy side lines, and there's just overhang. I mentioned also, very importantly in the previous clip, something else that we monitored. It's something that I'm learning about. It's quite new to me, and it's a very useful piece of information, and it involves the indicator that is, wait for it, let's get him here, hold it, one more time. That's our theorem. That's the one I want. Let's take the drawings off there. So this is known as ASOL. Don't say that after a few drinks. You might get in trouble or punched in the mouth. But ASOL, so it's the average output days that Bitcoin is sitting in a wallet, and above 250 days. And then when you start to have that hodl money being moved off wallets, that's when people are taking Bitcoin to an exchange, and that usually means selling. And you had a huge amount coming in. This was an absolute record coming in here. So this is again indication that there was money that had normally been very much in the long-term hodl environment, and that was just expanding. In fact, red's the wrong color. Let me take that off. Let me do it in blue. You can see a higher amount there. There was some profit taking, a higher amount there was some profit taking. That was pretty smart money. Again, there on the downside, again on the secondary high, a super high amount here on the secondary high, and we were getting ready for our short there. Then you spill really hard. People hated that. You get a spike, and then over here a whole bunch. I mean, that is just huge. Figure of 8 around it. Huge amount of Bitcoin that is normally in the long-term hodl category that's being moved. That means that money was coming out. Sorry you hated us for being bearish and negative and saying it's fizzling. You know, always get unfollowed for being not on message. Every day is moon, apparently. If you're not an every day is moon guy, if you're not a McAfee, $1 million, $2 million, $10 million, who throws out the biggest number on the long term, then maybe, you know, you're just a badass guy. Who knows? But anyway, so folks are getting that one, in my view, wrong. That's a proper fizzle on this. And I suspect, if you're asking me for my opinion, it's not super high probability. I'll accept whatever it does. I'm guessing that that spill might not be over. You're getting a little bit of buyback, as I've already said, a little bit of continuation. The support and resistance guys will get a smack. Those that probably are accumulating here, done the buyback on that wick, will exhaust in the same way those guys along the bottom there tried to buy it up and exhausted, and you got that sell-off. So the trend is your friend. Keep going until you see real clear sign that it evidences. By the way, if we get a super impulsive move, then I'm just inaccurate and it's turned out the other way. Great, I know where the low and the final low is over here. So the market is just a feedback mechanism. You can have a probability bias, but at the end of the day, don't ignore what it tells you. If it tells you something differently, I'm going to go with that. But I would prefer to see less of a spike and more follow through and trend. There's a big difference between spikes and a trend. You can sometimes have a short squeeze. Anyway, on that piece of information, I was talking to my premium guys earlier. Believe it or not, if you take Bitfinex into account, BitMEX and Binance, there's still slightly more longs, leveraged longs, than shorts. Bitfinex is a big long-based variety. BitMEX has actually swung short, and he's probably the more professional trader, I'm guessing. Bitfinex might be a bit more retail trader, early days, I don't know. But both Binance and Bitfinex were, the typical exchanges, were indeed net long. Just Bitfinex quite a lot, but BitMEX was the other way around, short. So we're still in the overall traders net long. So these guys are eating pain right now. Do not underestimate that they're eating pain and they back down. The spike should never have fizzled. Every time they see that, they chase with momentums. This is it. This is the low. Back to moon, etc. You see you were wrong. Emotions. No, it doesn't matter. It's not about wrong and right. It's about whether you make money and whether you just defend money when it's an uncertain time, which is pretty smart because it's not too aggressive thing to do. What else have we said? We said if you want to be crypto neutral, but have to be in a trade, you can cross crypto trade. And that was one we gave and discussed in our premium area. And I can say to you that the trade we took, which I've also, if you're not following the Twitter, you will be missing these updates. But they always come out after I've served my premium community, so you won't be the first, but you can still sometimes, if we're accurate, do okay. This is what's going on there. We shared the chart. Let's get it. Here she comes. Crypto. Yep, the rising wedge. So there's a rising wedge. Let's just show it to you on there. I did a bit of annotations for you. That's a bit small. No, it's about fine. You'll see the Batman. We call it the Moscow minaret. It's different to a head and shoulders due to its convexity and very spiky, narrow shoulders. And it also has a very convex head. The head can be lower than the highest minaret. That's why it's different. Anyway, you'll learn more about that on a program if you do it. Anyway, the rising wedge is the bit. But the point is this has made a neckline, in essence, very similar to the way you would talk about necklines in head and shoulders there and there. So you get a very spiky minarets and you get a head here. And as I say, this doesn't have to always be higher than the highest point. But there's you go. There's your little sun and there's your symbol of worship, and here's your neckline. And what's happened now? Again, this grindy buying, trying to push the alts up. The alts need their day. The alts must have their day. This time it's going to be Ethereum's going to bounce back. Only failing to make a new high. It's what I call the late bulls pre-exhausting themselves in an attempt to make a new high on what is a very convex structure. And then suddenly absence of bid events, which are clearly warning you. And what do? You get the rising wedge like that. And we say trade the break of the wedge. We discussed this in the premium community, and that's exactly what's gone down. So if we move to the live chart and have a little look at that one, you can see how it's panned out. Let me take those off. Yep, indeed. And you'll even have, to a degree, a little bit of head and shoulder structure in here too, in that you will have a left shoulder, kind of like that. You'll get a convex head. You may get a rally to get everyone late bulls again. No, it's fine. Everything's going to be all right. And you get a neckline there. And next thing you know, you generate a target down to there. That begins the process of the break of our grind line and the ascending wedge breaking down in its move. So that's kind of Ethereum BTC. So if you don't want to have a view, maybe Bitcoin does base out and starts going up. It will probably lead in terms of being the crypto voice. It will probably lead and the alts will lag if there's a new bull to be brought about. And as a result of that, you'll still do okay whether the crypto market's going up or down. If you pop over to the coin market cap, I think I had it open somewhere, maybe not. Stick him over here, let's grab him. Coin market cap, you'll probably see that in terms of how they're performing, Bitcoin is probably going down less in percentage terms than the individual alts categories, particularly liquid alts like Ethereum. So here you go, you're down 5.6 on Bitcoin and you're at 8.56. I like those two for the short. Ripple just never went up, so it hasn't got much scope to even go down. Cash is down 7. You've got 9% Litecoin, 9% EOS. Most of them are 9 and Bitcoin's at 5. So that means you're getting a differential of 4. But the benefit you have by not being short on the fiat is if it reverses and finds support at that Bitcoin level and actually pumps, it'll be Bitcoin that'll probably lead the drive as well. So it'll continue to relatively outperform. So if you pop over to the dominance side of the market, how are we doing in this constricting market across all coins, Bitcoin and the alt category? You might be finding that the Bitcoin dominance, after fizzling off for a while, has now formed a rounded bottom and is getting a little bit of basing out. So I discussed this as well in the last video. If we have a wee look at it, I take you to the daily on this one and expand the detail on it and give you a small snippet of the analysis there. You can see the falling wedge here. That was a breakout point. So back to the pen, you kind of had a breakout point there. That's a little bit of a sniper sight, and you had a breakout point there that was very, very firm, but it all fizzled back. So you've got a sort of layer of support that's come in since here that you found. This was a falling wedge of its own. It pumped, it then has the return move, and now it's gone from convex to concave and doing a little bit of basing out. It's also very low volatility, so it's kind of settling there, which often just before a new move might take place. So you had a key levels of support. So you might find dominance goes back up to 70%, but it could be in a contracting market and then later in an expansionary one. So you don't have to be, you're agnostic to direction. Currently it's one of contraction. So that's a couple of ideas in terms of the majors that you get in terms of this particular trade and your update. And I'm afraid to say that that spike, if we go back to the BTC USD chart, has definitely come almost 100% of the way back. Look at that. I did highlight previously as well the roles, how Fibonacci is kind of useful and can tell you a little bit about some of the motion. It's not always tradable, particularly interesting information, but it is informative generally. We did throw the 100% from there all the way through the low, so that you're 100 down to 1, and you can see that you kind of paused at the 50, the 38.2. You sat and squeezed a continuation pattern right here on the 23.6. So you're literally sitting at that level and then you binned it down. So the fibs had some interest in terms of how the price behavior was interacting with it. But now you're virtually at barely 5-10% above where the market was when it before it broke out. And don't forget, before it broke out from this low, it was actually formed a base here. It actually spilled down first, so you're actually lower than where you were basing out and had your initial little dip and then pump. So at this level, the 8,000 level, you've now let go of the 8,000 level and you're at the 7.5 level. So another key level that's dropped. So we've dropped the 9K, we've dropped the 8K, you've dropped the 7.5K, and you're kind of just trading above 7.5 for now, but it's a bit of a precarious situation. So I think it might stabilize for a bit here, giving a false impression of support, but then maybe hurt a few dip buyers. Catching the falling knife. So watch out, don't be one of them. You don't have to be that guy, you don't have to have the first percent. Okay, like and share. Also grab the mini series in the notes and book a call if the crypto analysis and working a trade is interesting to you. By the way, there was one of my Twitter followers spoke of this particular one, and just to give him some credit, there was a target made on Carver BTC. We spoke about this in our premium area as well. Generally the appetite is, whoops, don't want the fib again, you can go. Give me back some voice of reason. There's too many fibs. There's touch screens, they're jumping around. Oh, too much. So yeah, take that off. There was a move that made target. We talked about it more in a fractal sense. In other words, this bit here was more interesting generally, but you got target performance there over there on the wick. So there are a few little coins, recent joiner, and smells a little bit like salt, securitized and lending. So who knows? I'm not a big fan and champ of getting the early ones. I'd sooner they prove themselves. You can spend a lifetime reading white papers for a lot of events that don't occur. I will warn on this one that when Bitcoin reasserts, this is quite a nasty little grind line, so it could then have, after grinding along it for a while, quite a big sell-off and readjustment. So by no means is that a recommendation. It was just a single tactical trade that did bring a little bit of bacon in for those that were into it, and to respect the follower who wanted me to have a look at that for him. Okay, so that's the Crypto Sniper. Again, Mshlanga on the 26th of November. If you're in and around, pop over. It's in my tweet stream. Follow the Crypto Sniper at the Crypto Sniper if you want the crypto stuff, the market sniper for the rest of the good stuff, and the reset sniper for the all fall down. And I will see you on the other side of this. No recommendations intended here at all, but it's got a little bit disorderly for Bitcoin, and it is spilling, and the Fizzle has taken its full bite out of the spike, and as a result, by being a leverage long, you will have been hurt. Please be careful. Wait and let these settling, gradual channel-based easing. It's a natural part of a summer that there must first be a winter and a spring, and you just have to be patient. Do not blow your stack in trading or trying to make trades in this environment generally, unless you're experienced at shorting in the markets and you have a real method. And for that, I would suggest chatting to us. Maybe other people have great methods too. I can't comment, but we're very happy with what we do. Okay, that's me done. I'll catch you at another time. Hope it's useful, and play safe out there. There's a great bull season coming, and you need to have your powder dry. You need to be ready, and you need to have your Bitcoin still available to max out in the big bull that will come. Most of you know how to max those things out, and this time you're going to make sure you keep most of it. Okay, I'm done with you. Bye.